All right, everyone. So what we're gonna do in this video is I'm gonna try to I'm gonna be talking about a company called Castor Maritime. It's a shipping company that IPO'd a couple years back, and we'll sort of get into you know what the company's been up to, the stock split they did a couple of years ago, and why the stock price has tanked. But it's not going to be all negatives. We're going to talk about some really interesting pros, and if you wanted to invest after what I'm about to show you, you totally could. But what I'm going to do is I'm going to start off with uh, the stock price. And if we go here, again, I'm recording on April the 6th, sometime around 10 o'clock at night. So that's the stock price, 70 cents a share. You guys can see that if you, and again, this is just a simple Google search. The ticker symbol is CTRM. Um, right here is the stock price. So per share, you'd be paying 77 cents. Um, and the market cap is really interesting. So you can see here, the market cap, the total market capitalization of the company is $73 million. Thereabouts, it's a little more than that. But it's a really important number because as we get into the balance sheet, which we'll do in a couple of minutes, you guys are going to see that that is like the market is behaving super irrationally. And I can understand why. So let's go ahead and get the big elephant in the room out of the way. You guys can see it here. The stock price from 2019 when it IPO'd it with 20 bucks, something like that. It's probably the furthest back that it goes, but the annual reports for Castor actually go back to about 2016. Um, the stock has been doing pretty bad. So, kind of explain if you guys are bag holders at $20 or if you guys are bag holders here at 581, or if you're like me and you're a bag holder at about here, um, whether it's worth it for you to hold on or whether you guys want to just bite the pillow and take the loss. I think it's really interesting to actually read the annuals. So I've been reading all of the annual reports for the company. Like I said, they go back to about 2017. And the figures are really important because, again, the company IPO'd, they had maybe like $1 million before they IPO'd. And then after that, they just got all of this fucking money. And I think the company has been just making money out the ass, to be professional about it. But there are a couple of big things that would deter investors, and it's one of the things that kind of turned me off to the idea originally. And then I started looking at the annuals, and I was like, it's okay. So let's get started with the annual report for the last year, so 2022. The column on the left is going to be for the full calendar year of 2022, so the 1st of January to the 31st. And then this is going to be December of 2021. So that whole year from the 1st of January to the 31st of December for 2021. This figure is super important. So if you guys go to market cap, that's the total market value of the business. That doesn't mean, I mean, that's essentially what it's worth in cash. For you to buy 100% of the business, you would have to pay $73.31 million. Now that's a really important it's a really important figure because we go over here to last year, and you can see cash and cash equivalents. Now this is super important because this is literally bank deposits that the company has and treasury bills. And this is really interesting because these bills expire by the time, December 31st. So the company will, on the 31st of December, should have had, if you guys go right over here, $142,373,151. So if you wanted to buy the whole company, meaning if you wanted to own 100% of Castor Maritime, you would be buying it at $73.31 million, but the company comes with $142 million of just cash. So it's almost double. That's just, that's market irrationality right there. So moving on, we can go here to non-current assets. So these are things that the company owns. Now, it's important as somebody who's reading annual reports to see, well, what does the business do? Well, for Castor Maritime, it's pretty easy. Like I said, Castor owns ships. They send them out. The ships take stuff from one place to another using the ocean. Now, the interesting thing, like I said, the total assets for the year are about $632 million. Now, equity is really important because you go down here And equity, if you guys look at the equation, it's equity equals assets plus liabilities. But if you come from the math background, which is me, it's you take the assets of the company. So total assets, $632 million, and you're going to subtract $171 million, and you are going to pop out with $461,495,060. Now, again, that's super important because if you bought the entire company, it would cost you $73 million, but you would be getting $461 million in actual value. Now, that doesn't include revenues, it's just on paper what the company's worth, which is bonkers. And of course, you have all of their liabilities, all that stuff, so debt, all that shit. But the really important number is equity because it's if that number were negative, what would happen is if the company went under, they would not be able to pay all of their debts. But you can see fairly healthy reserves. If anything happened to the company, they would be able to just, like I said, use their cash and cash equivalents and get out of pretty much any situation. Now let's move on to revenues. So you can see here that total vessel revenues, which is again, that's the only way the company makes money. It doesn't make money if it doesn't send out ships. Obviously, some ships are sometimes being maintained. Other times there might just not be any demand for the ship in the current market. But total vessel revenue was for the year 2020, $262 million. These are all of their expenses, right? So you go down and you subtract every single item here from $262 million. And you end up with $126 million in operating income. So that literally means that's what the company had before taxes, before interest rates, pretty much essentially what the management gave you in value. The net income, meaning that is your actual profit, is $118 million. Now, again, that's insanely, again, that's stupid because you could buy the whole company for, like I said right here, $73 million. So for the company to make 60% more of its market cap in just net income is just so fucking bonkers. So that's where I believe the market is behaving irrationally. Let's move on to a couple of the negatives because, again, they do exist. So here's one of the things that makes it a little interesting in terms of, like I said, one of the things that might deter a couple of investors is this sentence right here. So the management of our business, including but not limited to the commercial and technical management of our fleet, as well as administrative, financial, and other business functions, is carried out by Castor Ships SA, which is a company controlled by our chairman, chief executive officer, and CFO Petros, and I'm not even going to pretend to pronounce his last name, and Pavamar SA, which is a company controlled by Ismini, and whatever, who's the sister of our chairman. We are reliant on Castor Ships and or Pavamar continued and satisfactory provision of their services, meaning that Castor itself doesn't actually run their own ships. That is outsourced to Pavamar. And Pavamar, as it says right here, is controlled by the sister of Petros. So a little bit of nepotism right there. Whether you guys want to take it or leave it, I don't really give a fuck. The company's still making money. So again, it's totally up to you. But that's something that might deter you a little bit. It's kind of it gives you kind of a sick feeling like, well, did she get the job because of her merit? There's really no information on Pavamar, but I'm sure that Ismini, who is Petros' sister, is being pretty well taken care of. But that's something that I thought was pretty interesting. Now, here's another one that's really interesting. So, in the past, we have obtained loans from Petros to meet vessel purchase obligations of the company. These loans may not be available to the company in the future, or may only be available on more unfavorable terms, even if we are able to borrow money from Petros. Such borrowing could create a conflict of interest of management, which again, any of these factors could have a material adverse effect on our business, financial condition, and operating results. So Petros is the guy who's actually lending these guys money. So this entire operation could sort of be seen as Petros's personal bank account, I guess, if you wanted to say it, because again, if he has money and he's lending it to Castor, the interest he's getting back and his principal, like that's all coming from the company. So that's another thing that's a little iffy. So here's another piece that I found really interesting. So this is under management of our business. And again, this is in the annual report for 2022. Our vessels are technically managed by Pavamar, a company controlled by Ismini, the sister of Petros. Under the technical management agreements, our ship owning subsidiaries pay a $600 daily fee to Pavamar for the provision of a wide range of shipping services such as crew management, technical management, operational appointment management, insurance, provisioning, bunkering, accounting, and audit support services, which Pavamar may choose to subcontract to other parties at its discretion. As of the 31st of December 2021, Pavamar has subcontracted the technical management of 3 of the company's dry bulk vessels and 9 of its tanker vessels to third-party ship management companies. Pavamar pays at its own expense to these third-party management companies for a fee for the services that are subcontracted to them without burdening the company with any additional cost. Which again is pretty interesting because it's like the running of the actual business and the ships are totally independent of one another from what it sounds like. So Petros is in charge of just making sure everything's run smoothly, and then Pavamar's job is to actually like go out there and source contracts, or like it said here, is to subcontract a lot of the actual charters, which is kind of interesting because it's $600 a day. Think about that over 365 days. That's a lot of money. But if it's subcontracting it to people, a lot of the times the people that are subcontracting or taking on these contracts are people who have a lot of experience. So it could be beneficial. Again, that's just another thing that I found really interesting. This is another thing that I found really funny. So this is something where if you go to any of the chat boards like Yahoo Finance and go to the ticker symbol, go down to all posts, you're going to see some of the most educated people having phenomenal discussions. This is actually really funny. So as of the date of this annual report, Petros, holding the position of chairman, CEO, and CFO, is our only employee, which is kind of interesting because you go down here to major shareholders, and this little piece right here is interesting. So under name of beneficial owner, you go down here to note 1. Neither any member of our board of directors or executive officer individually, nor all of them taken as a group, hold more than 1% of the outstanding common shares, which again is kind of interesting because it's like, well, if you're the CEO and you're making, what is it, like 20 grand a day from all of the vessels, where it's like, how do you not actually own shares in this business if you ended up starting it? One of the interesting things, you guys do a little bit of digging, you find that Petros is like 32, like he's a pretty young guy. He's making like a couple $1,000,000 a year. Well, dude, like how much of the company, like why aren't you buying more of the company? Again, this is a super, just on paper, this is a very undervalued business in terms of the net assets per share. Now, a couple of things I want to share with you guys. These are just some graphs I made. So this is just a quick summary of the business. This is what it owns. It actually got rid of the tankers and then these 6 Aframax LR2 tanker vessels. So these bottom 2 were the spinoff of Toro. So what I'm going to be showing you guys doesn't really matter. Again, the annual report that I showed you guys, I think, is post Toro. But here we go. So equity, again, it's net assets, if you want to call it that. So it's, you take all of the assets, you subtract the liabilities. Right here on the left, you can see the equity in just dollar value is about just shy of $450,000, which, like I said earlier, it's a pretty good chunk of change. You can have the whole business for $73 million. So you'd be getting 4 times the value just on paper. Now, this is what I found really interesting. So if you go to equity per share in US dollars, the company is somewhere around the region of $4.50 per share in just net asset value, which is really interesting. You can see these peaks right here. These are isolated years, and I'm not going to really go into them because they don't really matter. Again, the company IPO'd here, and then they did a stock split, which subsequently crashed the crashed the value of the shares because again, it diluted everyone. But again, just where things are today, if you wanted to buy the whole business, it would cost you 70 cents a share, and you could buy it for a little over and you would end up getting a little over $4.50 in just value. This is another thing I found really interesting. So revenues compared to net income in US dollars. Again, you can see this is over the last couple of years. So 5 and 6 are 2021, and then 6 is going to be 2022. So you can see the company has made a substantial leap in terms of revenue over the last 3 years, nearing, a little over 250, $1 million, which again is what was on the annual report. And then the net income has been increasing as well, which is really interesting because again, this company is just in its infancy in terms of the actual publicly available forms. So if you guys go and look at their 20Fs, which is the sort of the foreign version of the 10K or the 10Q, you'll be able to find all of that information. This one I found really interesting. So net income as a percentage of revenue, and again, for redundancy, I put in percents. You can see here again, took a huge dip, 2019. I mean, there's a huge decrease from the last couple of years, from pre-IPO, but then 2020 to 2022, you can see that the company made substantially more. Pretty much think of this as like their like return, in terms of a percentage. You can see it's right around, 2.8 cents, which again is not bad considering you're already buying it for a huge bargain. And then a little more about revenue. So expense as a percentage of revenue. So you can see that pretty much what this means is that for every, for 2017, for every dollar spent, the company generated a dollar, which, thankfully these are decreasing. This is a decreasing trend if you want to be statistically correct, which is what you want to see in a business. You might see this peter off, or you might even see this increase because Castor has been selling a couple of their older ships to get new ones. So you might see those expenses increase over the next 10, 15 years. Totally normal, especially for this industry. But then this one was really interesting. So operating income compared to revenues. So operating income is what the management itself brought you in income compared to revenue. So you can see that revenue is pretty big. Again, that's normal, especially from what we've seen the last couple of years. But then operating income, so the amount of value that the management team itself is giving you, is seen a substantial climb over the last 3 years, which is what you want. Again, for the first 4 years, you have that a downward trend, but then after that, the company is just making buttloads of money. So it's kind of like, well, what is it that what is it that the market is anticipating? Do they not have any confidence in the management team? Like, what is it that is actually going on? I'm not going to do any mathematics or anything like that here, but yeah, it's just something to ponder. I think the company's fine in terms. Again, it's one of my larger holdings, so I don't actually, I don't think it's. I think long term, if you want to hold it, it could probably give you about $2 billion in revenue over the next 10, 15 years, just based off of the amount of revenues it's doing now. But yeah, I think the interesting thing is it's super cheap, and it's a bargain, and it's perfect for arbitrage, which is probably what I should have started with. So if somebody, wants to be a big baller and come in here and swoop up the whole company, buy it, sell it for parts, I'd be more than happy. But yeah, I just thought it was kind of interesting, and I wanted to share that stuff with you guys. So let me know what you think.